as we look forward, it's not impossible to put the U.S. in a recession, but if we get one, it's likely to be mild. The structure of the U.S. economy is just such that it's quite difficult to really put the U.S. into a major recession, absent a lot of leverage like we saw with the GFC.
Yeah, expectations on the dollar on the back of the data. Then, what does that look like on your front?
So in terms of expectations for today, we're really looking at two things. One of which is shift of purchases from goods to services. As we know, goods investing or goods purchases have been slowing. And the second is really what's happening with the core PCE, so the inflation number for the fourth quarter, and what that means for the Fed. The Fed raised their forecast for the fourth quarter for 4.5 to 4.8 year over year. And if that comes in at 4.8 or below, that'll be the first time in some time the inflation numbers the Fed's inflation forecasts have been too high. And so what that means for the dollar potentially is a potential continuation of trend of softer dollar.
Yeah, that's going to be one to look at. I mean, do you think then the Fed could get a bolstering to hike its rates just marginally by that 25%, specifically if you have that 2.8% figure today, or even maybe a little bit higher?
Right. So the Fed's almost certainly looks to go 25 basis points in February. And the debate really then centers around March and May, with the Fed likely to go in March, and then May becomes a little bit of the debate. And between the Fed's meeting next Wednesday and the meeting in March, we actually get 2 employment reports and 2 inflation reports. So those will likely weigh a bit more on the Fed in those meetings. In addition, we get projections in the March Fed meeting. So those items may carry a little bit more weight. But to the extent we get higher growth today, that could certainly raise the prospects for those March and May hikes.
Yeah. Any bit of jeopardy then, do you think, in these numbers specifically? Because it may push the Fed and other trade issues, of course, in another way, while markets could really be looking forward to this data as well. So if it does come out slightly off and doesn't even reach that 2.8% figure, does it perhaps offer a little bit of negativity to thinking a completely another way of how growth may not be as good as we thought it was right now?
Correct. Yeah, growth is going to slow in the U.S. This year. What we're talking about is the slope of that decrease, right? So how quickly does growth decline? So the Fed's going to be on watch for that. We've seen a number of Fed speakers in the past month cite concerns about that and for reasons for taking the pace slower, so they can sort of wait and see how the economy develops after the large rate hikes they made in 2022.